let's turn our attention to the bank that's actually making some waves on the exchanges. It's reported a weak Q3 NII, pre-provisioning operating profit, as well as profit after tax, all have declined year on year, even as the bank's asset quality has actually come out quite strong. And this asset quality strength, just guys, for our reference here, this is coming in because the bank has gone out and sold a large chunk of its NPAs to ARCs, and that's why the gross NPA number has come down very, very sharply. But on the operational side, you're seeing the performance not looking that great. Actually, we have with us Partha Pratim Sengupta, the MD and CEO of Bandhan Bank, to take this conversation forward and to understand what exactly has happened at Bandhan Bank in Q3. Mr. Sengupta, welcome to the conversation. Let me start with the profit number, because that's a big number, 52% dip year on year. How do you justify this? What actually happened during the quarter?
Yeah, so if you look at the year-on-year profit, so last year what the profit has been posted has come because of one-time payment of the CGFMU funds, and also some payment has come from Assam government. So if you aggregate those two, it was almost 595 crores which has gone to the other income. There were some one-time expenses that we also need to offset, and giving effect to that, the actual profit last time was 129 crores. Why I'm saying so? Because this year there has been no such income, one-time income that has come or accrued to us. So if we take out that Assam and government funds and the CGFMU funds of 595 crores, and also if we offset the expenses, one-time expenses mainly due to some taxes and ESOPs related, the profit actually last year was 129 crores, which has now purely through operations, we have made it 206 crores. This is the yearly impact. Quarterly impact, we have seen that it was almost a very low profit last quarter. We just posted 112 crores because of the effect of the repo rate and other factors. That also we have improved by 89%, and Q on Q, the profit has gone up to 206 crores.
Right. So those were, of course, the key elements that actually moved the profit. But even on the operational side, sir, your net interest income, that's also dipped about 5%. Is this because of the factors that you've mentioned already, or is there more to do with the way the quarter has panned out for you?
This NII has been largely impacted because of two reasons. The first one is that definitely the impact on the repo rate. So you know that almost 75 basis point was upfronted. That is the first reason. Number two, we have been making a transition. We were more in the unsecured segment. We are more in the micro banking segment. So that guidance we have given it earlier also, that we now need to become more of a universal bank, looking at our portfolio, and should not put all our eggs in one basket. So we're moving from a unsecured dependent book to a more secure dependent book, and that we have achieved. Today, my secured percentage is 57.3%, and a year earlier it was only 52%, and for even less than that, sorry, 48% a year earlier. And today we have achieved almost 57%. So there has been a drastic improvement in our secured quality, which has improved the overall quality of our assets. But as you know, that secured books is very competitive. We don't get that much of interest in the secured book. So definitely the impact of the repo and the secured books, as we have moved upon for the day, this has have an effect on the net interest income. But if you look in the current quarter, sequentially our net interest income has improved.
So just take us through what exactly the next quarter looks like, this March quarter, because the rate cut that happened in December will also have an impact on your overall book. So how long do you think this impact will last?
So there is one, the effect will be there from January onwards, the 25 basis point, but it was okay for 25 basis point. I think all banks are ready to absorb it. It will not make much impact, but when it happened almost 75 basis point upfront, that really makes an impact. And especially for our bank, when we were making a transition from the unsecured book to the secured book.
Okay. Let me take the attention to the secured book now. What exactly is your goal on the secured side? Are you looking at higher yielding secured assets, or are you happy with the way this mid-margin sort of book is panning out right now?
So let me tell you, we are targeting both. One is definitely where we are able to take a high interest income assets for that year. We are targeting like the affordable housing group is definitely one thing. We are also in the personal loan book also we are targeting, but more or less we are more concerned about the quality of the secured books. So let me like in the wholesale banking in my corporate book for that year, almost 95 percentage of my accounts are A plus, A and above for that year. Almost 25% are double A and above. So we are focusing on the quality on the one side, that is in the secured book. And also we are focusing secular growth in across all segments. So it is not that we are concentrating on a particular segment only. So we are going almost secular in the retail, in the housing, in the wholesale, everywhere we are doing it.
Uh, Tell us a little bit about the asset quality scenario, because that's seen a sharp improvement. Of course, the ARC sale did help. But overall, what is behind this improvement other than the sale?
So asset quality, definitely it has improved. One thing is that we have taken I would say a very important step this time. We have sold almost close to 3,200 crores of assets to one of the ARCs. And this has definitely given a one-time reasons. Of course, we have got a hit in the profit and loss because of making higher provisions, because you know that our PCR on account of this almost is at the same level at 83% if we include the write-offs. And we wanted to maintain that provision coverage ratio. So we have taken a hit in the balance sheet, but we decided that we should cleanse also our balance sheets, which were piling up with the NPA, especially in the EEB segment, that is the microfinance segment, right from the days of Corona. So we have got rid of those assets. We have been able to sell it to our ARC company, where we have also invested in the SRs.
This sale has also happened at a steep discount. How do you see that panning out for Bandhan Bank going ahead?
Yeah. So we got around a valuation of 18% in respect of the NPA pool and almost 9% in the write-off pool. But the good thing is that in the NPA pool, their share is much more. So they have invested 53% and we have invested 47%.
Understood. Sir. Tell us a little bit about the microfinance portfolio, because that's the other element that everybody talks about a lot. Do you think that the stress has now ended as far as the microfinance portfolio is concerned, or do you think there's more to look out for?
So let me tell you that we are really seeing green shoots in the microfinance segment. The first indicator is that my slippages have come down by 200 crores. It's a great indication, sir, during the quarter. The second indication is that my disbursements are also growing up. So almost last quarter, we have done disbursement more than 14,500 crores. And if we just negate the effect of these ARC sale in the microfinance book, because 3,200 crores of assets they have sold, there is actually a growth in the books by 1,100 crores. So definitely I can say that these are the two very positive factors. And when we look at the bureau data, we are finding that things and the parameters are improving in all fronts, whether it is the delinquencies, whether it is the repayment, whether it is the collection efficiency. So there has been quite a good front, and our collection efficiency of regular accounts is still at 99%, so which is a very good indication, I can say.
Let's take our attention to the advances growth side, because there again, 10% credit growth is a little slow for you all. How do you see this? Why has this happened?
These assets, 3,200 crores, means what? My books were 3,200 crores more. So these assets, I have sold it at one go. So if I had not sold these assets and with this 10% growth, my figure would be much more. And so it would indicate 12% growth. Simple thing is that today my book is 1,45,000 crores. If we had not sold these assets, it would be 1,48,000 crores. So from 1,31,000, I grow to 1,48,000 crores, which is a 12% growth.
So what would the like-to-like growth look like for Bandhan Bank in Q3?
So that is what I'm saying. The like-to-like comparison, if you have taken these assets for the day, it will be 12%.
Okay. Understood, sir. In terms of your trajectory, your outlook for the growth, 10% is still low. Do you expect to end the financial year higher than that number, though?
Yeah, definitely. We are, as I have told you, that this is not, there are other things also we have been doing. So the first thing is that you have to look that we were making a transition, because we were mainly microfinance oriented banks. So where there we are transiting to making a transition towards a more universal bank. So definitely we have been a little bit cautious also in the building of the assets, as I've told you, that in the wholesale banking group also we are looking at the quality of assets also. So definitely my target will be to grow faster than the industry, and that's what my aim is. But current year, at least current quarter, I can say that since the EV is taking a positive turn, and I am expecting a good growth in this segment also. So maybe that we'll be achieving a better growth this quarter. But of course, it is our expectation.
Right, Mr. Sengupta, thank you so much for joining us and taking us through the bank's result. That was Bandhan Bank's CEO talking about the quarter that went by. Of course, looks like the stock market's rewarding the stock at 4.5% higher.